and welcome to the Our Sustainable World podcast, a series where we travel around the world interviewing some of the most innovative founders tackling some of the most challenging sustainability issues across the globe. Today, we are in Nairobi in the Tera office, and I'm joined by Collins Muriuki, the co-founder and CEO of Terra. Collins, welcome.
Thanks for having me.
And well, thank you for hosting us in your office, first of all.
Anytime,
Very beautiful office.
Thank you.
So Collins, can you just tell us a bit more about Tera? Who is Tera and what is the mission?
Yeah, so Tera is a fintech. So based in Nairobi, Kenya, this is where our headquarters are. We offer what you primarily call wallet as a service for startups and businesses across Africa. Our mission is to just make sure we drive financial inclusion in Africa. And our vision is to, of course, be the leading provider of digital wallets in the continent.
Can you just explain to us, what is a digital wallet?
Think of the wallet you have in your pocket, right? The one that you store money in, you put money in and out when you're making payments. But now in the digital realm of things is that it's a digital way to store money. In Kenya, for example, you think about M-Pesa. That's also a wallet that you can store money in, and you can send money to parents back home. We can make payment bills around. So wallets exist in many ways, and wallets are everywhere. There's a wallet for you to borrow money from your bank. There's a wallet for you to borrow money from your circle or your investment group. So wallet is just a store of money or value. And it can exist digitally, not in a physical way that you'd keep it in your pocket.
Terra's focused on digital wallets. It's not always been the focus of Tera, and Tera has not been your only entrepreneurial venture. If you go back into your past, earlier when we were talking, you mentioned that you had quite an entrepreneurial experience growing up with your father and your own experiences.
Yeah.
Could you just tell us a bit about your history and your relationship with entrepreneurship?
Yeah, absolutely. For us, it started at a very young age. I started working when I was in high school. So my dad used to own this small hardware shop. And every single time during holidays, we'd go back and spend probably 3-4 weeks before you go back to school. And you learn the fundamentals of a business, right? It's buy something cheap, make a markup, a spread, and you call that profit. So my dad has been an entrepreneur for the longest time. So he really instilled like those values into us. When I went to university to do computer science, I really loved business. So when I was in the second year of university, I started working. My parents didn't know about it for sure, because they wanted me to stay in school and learn a lot. So I spent 3 years of my university life working and as an intern all through. And that exposed me to a lot of things, to understand how businesses run, what structure is, jargon, how to speak to customers, how to speak to partners, the value of social capital, for example. So I learned that before founding Tera when we were in the third year of university. So Tera was founded in 2019, actually. 2012. Third year of university, where we did a couple of projects here and there, all the way to about 2019, where I was telling you the story of, how COVID affected us. Yeah.
So let's go back to that in sort of 2012 and the idea of Tera came about. Can you just talk us through that thought process and how it led you to the formation of Tera?
Yeah, so it's interesting because Tera came out of a need for us to get paid for it. That's the story. So the first customer we had, which was a nonprofit organization in Kenya, being funded by Bill and Melinda Foundation, approached us to do a solution for sanitation, right? And we offered a cashless way for people to pay and access hot showers, a toilet in Kibera. And I remember during the project, we had to get paid. When I was in university. So one of the things were like, okay, we're going to pay you in cash this first time, but next time you need a bank account. So the concept of creating a company was very foreign to a lot of us when we were young. So you wouldn't imagine you being 22 years old having a company. That wasn't how Kenya worked. You'd finish university and, get employed and then get experience and then figure out a company. So we had to incorporate. So we incorporated Tera when we were in third year. That was in 2012. And my partner, actually, Martin, came up with the name and said, let's call it Tera. I was like, why Tera? Tera actually means earth.
Okay.
It means earth. And he said, okay, we're going to call us Terra Softworks. And I was like, why Softworks? Because we're building software for earth. And that's where the name Terra actually came from. Yeah.
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 Right. And you mentioned the term earlier, sort of social capital. How important was that, your relationship with your co-founder, Martin? How important was that in the formation of Terra and the delivery of the first project as well?
I mean, it was important. It was very important because remember, being a startup that has bootstrapped for all this time, your customers are your number one, stakeholder. That's what I say. Solve the people internally, and then solve the customer. Actually, it's the other way around. Solve the customer, and we make sure people are happy. So when I talk about people, I look inwardly and externally. So internally, it's the people, the staff within Terra. Outwardly, it's the customers and partners and stakeholders. For you to get partners and customers, social capital is very important. And I always look back and say a lot of the things that Terra is doing now are probably seeds we planted 5 years ago. So there's a lot of projects, a lot of things that you talk to people, hey, let's do this, and it didn't work out. I always say, just leave it in the ground. That's a seed you planted. You don't know, probably 4 years down the line, someone will call you and say, hey, Collins, there's that thing you told me about 4 years ago. I think there's an opportunity. So that has been in the DNA of Terra, is saying, we'll go and try new things. We'll talk to a lot of customers as we can. We'll talk to a lot of stakeholders. We've talked about what you're trying to do, and who knows, probably down the line that might lead to a partnership, or you could be my customer, I could be your customer. So that has been very important for us during the early days and even today at Terra. Also figuring out very early on, because I started working very early on, is going to people and telling them, hey, I don't know. So I'm always very vocal about saying, I don't know something if I don't know it. So I always reach out to a lot of people, say, hey, there's this thing that I'm doing. I'm not sure whether it's going to work out. What do you think about it? So a lot of those people end up being either partners, end up being people in advisory, helping you build a company, or even customers down the line. So social capital is very important. Yeah.
And I like the point that you made about, conversations that you have from 5 years ago are only starting to come to fruition now, because I often find myself getting frustrated, particularly when you're having meetings with lots of different businesses about potential opportunities, and at least 90% of them don't go anywhere, and it can be quite frustrating at times.
Yeah, that takes time. Even for us, I realized very early on that don't get angry about it or frustrated about it. It's inevitable at times you go and you're like, this didn't work out, I really wanted this thing to work out. But what I've seen in the last probably decade of starting a company and it dying, and the rebirth of that company as well, is that anything you do, just think of it like an investment. If it doesn't work out, just leave it. There's some things, just give it everything. Down the line, something will come out of it. For us, 90% of the opportunities that we didn't see coming in, for example, one of my biggest customers is, Kenya Tea Development Agencies, right? I started pitching to them in 2013, 14. We got the opportunity to work with them in 2021. That's almost 7 years later. They came and we got an opportunity, and I was like, this is something that we started way back. So through the journey, this frustration, you go through all the 4 stages of what people call anger, and then you leave it. And then that was a seed we planted in 2014 that we ended up reaping in 2021. So right now, Terra is managing all the tea farmers in Kenya, for example. And that was an opportunity, that came way back in 2014.
Yeah. A seed worth planting then.
Yeah, seed worth planting. Yeah. So plant many seeds, and that's what social capital has. You just plant 1 billion seeds, probably 1 million will turn up.
I like that. I really like that.
Yeah.
So just to go back to that very first project, I mean, I can imagine as a 22-year-old, it must have been maybe a bit of a shock to have, ultimately an organization that's funded by Bill Gates, one of the most famous software engineers on the planet, interested in working with you on your solution. How did it feel?
Oh man, if I'd go back then, that was scary. Because now you don't have a ton of experience delivering products and systems and solutions right in the market. No one knows you. So there's no brand mileage to say, so it's you trying to prove yourself and others wrong to show people that you can actually do it. So it was a mixture of excitement saying, hey, there's something we're doing, and it's been funded by Bill and Melinda. They actually came to see the project. And, and they, back then when it come, you'd not be in the front line because, the nonprofit is there, it's all, celebration and whatnot. But I'd sit in the back and say, hey, we did this, and it was exciting, but also as founders, there's always that voice at the back of your head saying, what if it doesn't work out? What if it fails? And then, will anyone trust Collins and Tera to do anything else for us? So it was a mix of both. I remember I didn't even tell my parents we were doing that project. Yeah, because they'd be like, why are you not in school? Why are you not studying for your exams and whatnot? So it's something we did, and we'd go back to school in the hostels and sit and celebrate and say, hey, we did this. We're one of the first companies to do tap and pay in Kenya. But yeah, mixture. It was a mixed feeling. Both, feeling of success and accomplishment, and you feel like people need to see you and see what you guys are doing. At the same time, there's always the fear of, okay, what next? Did we do the right thing? So there's always that, yeah.
Well, gladly you did do the right thing.
We did the right thing.
The project was a success.
Yes, it was.
And it enabled you to fully incorporate. And then just talk us through the journey from that first project, maybe into sort of 2019.
Yeah, so after we incorporated, now we had a company, and that's the first time I realized a company is like a baby. Because now, back then, incorporating was a long process. Would probably take 2 months plus. So there were no automations, there was no systems where you'd go to government and apply online. So you had to hire someone to register. And I remember when we got the incorporation documents, we were really excited. Because why? I'm a 22-year-old with a company, right? So it's exciting for everyone. Like, yeah, I own a company, you call yourself CEO, you give yourself titles, and then reality sank in because now the NGO had closed. We don't have any money coming into the business. Realize, okay, so what next? This is a baby we need to feed. And the only way we feed a company, get customers. So the journey was slow, very painful, because when you graduated, we didn't go back to seek formal employment. One of the things we agreed with Martin very early on was that, hey, we need to build Tera for the long haul. And we sat down and we said, this is a journey we're going to take. It's going to be painful, yes, but let's give it 5 years. And, we took our certificates back home and we're like, hey, Mom, I graduated. Fantastic. I'm going to go build this thing called Tera, And we started the journey. And very early on, we realized it's not easy to sell. So it's not easy to convince a customer to pay you. So with the success we had with the foundation that we were working for, we realized, okay, there's not many other foundations that wanted to listen to us because we were very new and very young. So I started developing again. So I went and learned how to program in YouTube. I did computer science, but I didn't pay attention with programming because I didn't want to be a programmer. So I went to YouTube, applied the fundamentals I knew and learned how to code and started doing websites, small projects here and there. So Tera really morphed to be a technology company that will make all these nice technologies for people. We did that for about 3 years, and then we focused on payments, where we built a payment platform, a payment gateway to process payments. And that became very successful for us. So we got a lot of customers, a lot of hotels, a lot of people selling airline tickets, came to us and we'd give them away to process these payments when people are booking online. That was a very good journey. The first 4 or 5 years were the toughest. They were really hard. And then when the payment gateway became mature, we started seeing customers coming in and we scaled to 3 countries in East Africa. With a team of about, I remember very well, probably anywhere between 35 to 45, because we had a mix of like full-time people and remote people working in the organization.
So yeah, it sounds like quite a successful few years off the back of your initial success.
So the first years were hard, and then it became successful. We started seeing, like a path to profitability.
Yes.
We became profitable really early on. So probably by year 4 we were profitable, and then we 100% like plowed back into the business to create the growth. So we've been running lean for a very long time. One of our principles is always run lean. As lean as we can. So startup mindset, run lean, don't have a huge cash burn, plow back every single coin in profits into the business and help it grow, like give it every possible chance of success. Yeah, so we grew like that, until COVID hit. Yeah.
And yeah, just touching on COVID, because COVID was a big catalyst for a drive towards digital payments and
Yeah.
digital financial services.
Yeah.
But you had a slightly different experience of that based on where you were positioned. Can you just talk
Yeah.
us through it a bit?
Yeah. So when COVID hit, a lot of our customers were in the hotels, restaurants, catering businesses, and a lot of people doing airlines. So we were in that industry because when people book tickets, they come into hotels, we'd facilitate that entire chain, which was really good before COVID. Like tourist numbers were up, people were traveling, local tourism went up. So business was really good. Now when COVID hit, no airlines, flights are not happening, hotels are shutting down, there's no customers coming in. And we realized we built this entire business model around one sector. So the platform was not very sector agnostic. And that's some of the learnings we picked up from that. So when everyone else was thriving in digital and whatnot, Terra was sinking. And that's what led us to lose about 90% of the business.
Right. Well, and of course you had to scale down.
Yeah, we scaled down. So from about, the 45 people, having a team makes things really, really easy, right? So it was a hard transition, to close all these markets coming back to Kenya. We didn't close them at the same time. So we closed all the other virtual offices and whatnot. And then, the employees laid them off, came to Kenya, scaled down until we were like about 4 or 5 people in the organization. So we went back into the trenches. We went back to 2012, 2013, where we had to rebuild it again. So when everyone else in the world will benefit from COVID and digital, not everyone, really tech companies thrived during digital. For us, it was shutting down and figuring out what next for Terra.
I just want to touch on the theme of resilience.
Yeah.
Why didn't you just give up then? What was it that made you think, I want to keep going and give this another go?
That's actually a good question, because when I look back, I see two things. It's not only resilience, but also grit. It's holding on to Terra and saying we're not going to let this thing die. If you look at our history, that has been there since the day we graduated. We said we're going to do this thing in the long haul. We're not going to give up on this company. And we give it everything. So even after COVID happened, I remember that December when Kenya, now COVID was really like coming in, and flights were not being cancelled and whatnot. We had coffee with Martin and, we said, what next? And we made the tough decision to shut down and, let lay off people. During COVID, we didn't lay off people immediately. We retained my staff for 6 months, and we had no inflows. So it was just cash burn, burning. And after 6 months, we realized, okay, this thing is going to take longer than we thought. So from very early on, I think it has been in our DNA, me and Martin, around grit and resilience. Say when one chapter closes, there's always something, just don't give up. And it's easy to say don't give up until you look at the numbers and everything around you that's telling you this is not working out. So those are the things that helped me, made us still stick and work on Terra. So when all of us were holed up during COVID in rooms, I was busy programming. Martin was busy programming on the other end, and we'd have daily calls, in the evening. It was very draining. It was very stressful. Because that's also the time like I was planning to get married, to start a family. And now you have to look at the family that you're starting up and asking yourself, is this the right decision to make for them? To be honest, that's the first time you start thinking, should I get a job? Just make sure like your family is, is afloat. So during that period, it was a long period of about 6 to 8 months, trying to figure out what to do with Terra. Until I got the one call from a good friend of mine. I called Mawera and Jihu for food for education. It was like, Collins, there's an opportunity to feed 1 million kids. And mind you, how I got to get to food for education was through a seed replanted way back. So it's someone who called and like, there's these guys who are doing something around time to pay. They're the best guys who can help you out with this thing. And she called. And that was the beginning of, the journey for Terra 2.0.
Yeah, that term social capital
Social
comes up
capital,
again. Yeah.
yeah, came back again, and that has really like been instrumental, in our entire like journey at Terra, is figuring out that just talk to everyone,
Yeah.
tell everyone what you're doing. Before we weren't big about saying what Terra is doing and marketing and putting our stories out there, but now we have the opportunity to do that better, and that's why we even probably been sitting here telling our story with you today. So social capital played in the seed that we planted way back, came to play, and she was like, Collins, let's do this thing, and that was the beginning of our recovery and our rebirth from COVID.
Yeah, and it seems like you went back to the beginning
Yeah.
again with the tap and pay and go
Yeah.
solution there.
Yeah. So that's what happened. So what Food for Education does is that they have central kitchens. So they have kitchens where they cook food, and this food is distributed to like public primary schools around Kenya. So the problem was, how do they collect these small contributions that kids make for lunch, right? Before, it used to be a child coming with money from home and giving, the person who's serving food money. They put the money in the pocket and then they get lunch, and then this guy has to look for change. At times those coins fall into the soup, and then there's a lot of fraud going on because now kids will hide money in class. So hide money in socks, and then kids will steal from each other, kids just being kids. So they wanted really a solution to scale the program. And the only way was to digitize how parents make that contribution for lunch and how kids access that lunch every day. So when they came in, I was like, yes, there was something we did, way back that we think would work. No guarantees it will work. But remember what we did for the foundation in Kibera, the tap and pay for hot toilets and, and hot showers. We said, let's use that and see that works. And that's the technology that we deployed. And it worked because we found a program with about 30 children. We were able to help her grow during the pilot from 30 to 300. Because technology became an accelerator. It means now they wouldn't have to worry about how parents register, how parents make contribution, and yeah, that was a journey. So in about 2 years, we grew the program from 300 to about 100,000 children. And that scaled all the way to 250,000. Now I'm sure they're on track to get to 1 million kids in Kenya.
Well, and that's all supported thanks to your technology.
It was a journey we started with them.
How does that make you feel, knowing that something that you've created is having such a huge impact on children's lives?
Wow, it's that's a good question, because for me, remember when the call came in first, like there's an opportunity to feed 1 million kids, I didn't quite understand the problem until I went to one of those schools and I saw kids hungry, like what lunch means to these kids, right? If you're talking about quality education, right? If you're talking about, healthy kids, to avoid stunted growth, for example, you need to think about nutrition, right? And food. And that's a problem they were solving. So when I went and saw the program in action with those 30 children, was it 30 or 100 then? For me, I was like, I get it. So there's a way for technology to enable these kids actually access nutritious meals. And for me, I never in my wildest dreams thought that my technology will be used in feeding, right? So we never thought about it. And it really made us feel that we're doing something, for the community. It made us feel that, this is something that we could be very impactful to not only parents and kids. So in addition to even just like giving nutritious food, we realized that there was an education that was happening. Kids started seeing money existing in different ways, not physical cash. So it used to be interesting because you'd find kids chewing the wristband, looking for, where's that 50 shillings? You're telling me there's money here for lunch and they can't see it. So there was a financial education that was happening. We just didn't realize that kids are starting to realize at a very young age that money doesn't need to be physical. Money can exist in digital formats. And, this is one of them that I tap and make a payment. So for us, it was, it was very insightful. It was very profound. And we realized it was very impactful very early on. Yeah.
And that's what leads me on to my next question is, technologies like digital wallets, what impact have they had on Kenya and the African continent?
Oh, it's huge. That question, it's huge. When we did our research before we started focusing on keeping wallets as a service, we realized that digital wallets are going to be the drivers of financial inclusion. One in about, I think, 20 people don't have access to a bank account. The stats are insane. When you do it across Africa, you realize only 20% of Africans have a bank account. 20%. Where are all these other people? They're the M-Pesas, the digital wallets. So they have these small circles and institutions that give them a way to access money one way or another, but they don't do that using traditional banks. So we realized that for us to be very serious about our mission, which is financial inclusion, wallets play an integral part. So wallets are being built everywhere in the African ecosystem to sort different problems, from nutrition, like you see in food for education, to transport, to healthcare. And these are spaces that typical banks don't play in. And people are coming up with all these fintech solutions and services to address these markets that are unbanked. So we asked ourselves that, if digital wallets are on the rise, clearly, are projected to be probably a $3 billion economy by, I think, 2025. That's according to McKinsey, by the way. If digital wallets are integral, who's building the infrastructure to support it, right? And we realized, okay, there's a gap there. Everyone wants to build a wallet, but not everyone understands how a wallet should work and operate. So why don't we come to the heavy lifting and come up with the infrastructure to support all these startups and fintechs that want to build these digital wallets that, to drive financial inclusion? Yeah, so wallets are really integral. Yeah.
Yeah, and I just wanted to pick up on this Tim used the unbanked.
Yeah.
It seems to me that the banking is a very traditional way of having a bank account, the very traditional way that we've used in the past.
Yeah.
But actually, do these people who don't have access to banks, do they even need banks anymore? As you mentioned, they've got digital wallets, they've got access to all these other fintech products.
Yeah.
Do they need the traditional bank account? Is that actually something that we might see move into the past as we sort of go forward?
Yeah. I'm a bit torn, with that, because one, we're seeing the rise of digital banks coming up, which are pretty much digital wallets that give banking services. And I still think we need banks because there's a space that banks play in. Banks are very good at making sure there's compliance, regulation, and fintech's always there to break their rules and try to do things differently. So fintechs need to work with banks. That's what I've seen. I don't see a world where fintechs operate without financial institutions such as banks. We need to appreciate the fact that banks have been there for a very long time. They understand the financial markets better than we do, right? The thing that banks are like elephants, so they don't adapt easily. They're very, it's hard for them to think about that tea farmer, and figure out what solutions can we offer them. Fintechs are able to do that faster, better, cheaper than banks. So for me, the reason why I'm in between is I think there needs to be a collaboration between fintechs and banks. Banks to drive the back end of what you call banking and figure out, do what they do best and leave the front end and the user experience and delivering these products and services to the consumers, leave that to fintechs. That's my take on that.
And what is it like being a fintech in Kenya, East Africa? You've experienced a few markets in East Africa. What is it like from a regulatory perspective, cultural perspective, etc., etc.?
Yeah, so Africa is really an interesting place for fintech. Huge opportunity, number one. So in East Africa, there's a very big opportunity, and we've seen with other companies such as Nala doing payments, in remittance, and we see a lot of fintechs in Kenya getting, success. But however, Africa, when you look at it culturally, it's very, very different from what you'd see in the US and these other markets. Whatever works in Kenya might not work in Uganda. So it's not a one size fits all, right? So when I look at fintech and culture, it plays a huge part because you need to be very adaptable when you're offering fintech services and solutions in Africa. You need to figure out and understand the customer and the user culturally in Uganda. Do they trust fintechs? What do they prefer, circles as opposed to banks? Do they prefer saving? Do they even have a saving culture? So it's very different. It's not a blanket. And I feel like that's where a lot of fintechs go wrong in Africa is, trying to build a solution that works for everyone. But for us, we understand that dynamics in Rwanda are different. Dynamics in Tanzania are different. Dynamics in Ghana is very different. So you need to have a very adaptable solution for all of these markets. number one. Secondly is that regulatory compliance, it's a hurdle. It's not easy to navigate it. For us, for example, right now we're in the process of getting a CPK license in Kenya, right? We have to get the same license in all these markets that we go into. However, we found out that it's easier for you to partner with banks, and that's how again partnerships come in. If you partner with like EcoBank or Access Bank, for example, get cover in 14 markets. That's why I'm like, we need to understand the space that fintech plays in and banks play in. So for Collins, for me to scale across Africa, it's easier for me to partner with banks than going to every market and acquiring a license. I'd only go to every market to get a license if you have the number of customers you need in that market to justify the expenditure for you to go and try and get a license. So for us, when you look at regulation, it's pretty cumbersome to navigate it, but it's something we've done over the years, and now it's kind of predictable. You know how long it's going to take for you to get licensing in these regions. But for other fintechs, it's not as easy or straightforward.
Yeah. Well, one of my sort of own personal experiences is that the minimum capital requirement for a lot of these banking licenses is quite high.
It's quite high. And we go back to the DNA of why we're building what we're building, is to try give a platform that helps people go to market faster, better, cheaper. So for you to navigate, the capital for you to get licensed, someone is telling you to put $200,000, somewhere in an account, and that proves that you have capital to get licensed. How many fintechs can do that? Not many. So the barrier to entry is really high. There's a lot of gatekeeping. I'm not sure whether that's good for the ecosystem, but that's some of the challenges you have to figure out how to navigate here.
Yeah, it's probably, like you say, it's probably a balance between gatekeeping is good because it keeps the financial landscape stable. But too much then restricts innovation.
So there's a lot of that happening across Africa. But again, I think it creates an opportunity for also fintechs to partner. For example, some of the people offering our services across Uganda and Rwanda and actually other fintechs. So it's figuring out the power partnership. We can build a bigger cake than wanting to own everything. So that has also made fintechs collaborate more. That's what I think.
And one of the things that we spoke about earlier that's I think people watching this would be very interested in is your views around fundraising, and actually the fact that Tera is not fundraising, you've bootstrapped all the way to where you are today. Could you just talk a bit about why you chose not to go down the fundraising path? Because a lot of fintechs think that's the only way to go.
I mean, fundraising is tough. It's not easy, number one. So I have a lot of friends who raise funds, but for us as Tera, from very early on, we believed in plowing back everything, all our profits into the business. We said fundraising and capital should be an accelerator, not a reason why you start. So for us, we said, hey, let's take the small profits we have, let's invest it back in the business. That could be in terms of team, it could be in terms of other resources that we need. It could be in terms of expansion into Rwanda, expansion into Uganda, and see how that grows. What we figured out is that because we have a firm belief of what we do, we have our core values in the company, and our approach is to always take the path to least resistance, right? That's always key, path to least resistance. If I can get to Uganda with no fundraising and get 1,000 customers, I'll take that route. Because fundraising and capital should be able to come to accelerate Tera to be a unicorn, for example, or to be in 15 markets. But I don't think we need capital for me to get 1 million customers in Kenya. I just think we need to do a better job at getting to product market fit, speaking to a lot of customers, tailor-making a solution that speaks to their problem, and that becomes easy for us when we go to raise funds. Secondly, is that we don't want to raise too early on and lose control of the company and the business. I'm sure you've seen what's happening in the fintech space. Is that at times coming in too early is a problem, and also I think also coming in too late and not noticing when you need capital is a problem. But we also need to show other companies that you can actually grow steadily without fundraising. It's possible. We've seen a lot of companies around the world do it, and they're very successful. So for us, we're trying to figure out how can we still run lean as possible. We've seen it, even with Twitter and Elon Musk coming in and firing 80% of it. And Twitter is running 20% of the people, right? So it's figuring out that balance of saying, hey, how can we run lean but very efficient? How can we structure the organization in an efficient way to reduce a lot of costs to run the organization, but at the same time still staying profitable, at the same time still growing. So there are ways to do that. It's just not it won't be as as linear as probably other companies. So for us, even as founders, you sit at times and you look at other companies raise money and you're like, no, I could raise $3 million. I could raise $1 million. But you have to sit and say, that's not the journey we are in for us. And say, our journey is to bootstrap this organization for the next 8 years, get to a valuation of a certain amount, backed by profits and growth. And then saying, hey, now Collins can hire a CEO and we can stay back and be founders and let the company, grow by itself. So that's where we are. It's want to build a legacy business. And with that, we need full control over the company. So we're not really keen on raising very early on. Yeah.
Interesting. Yeah. Because as you say, so many people are so focused on the fundraising element. It's the only way to grow.
Yeah.
But actually, you're a great example of, and you've done it twice. You've bootstrapped to profitability. Had to really downscale because of COVID, and then done it again. So two examples of why that works.
I don't want to make it look easy. It's very tough. Those sleepless nights, days you question what you're doing. There's a number of days I wake up and I tell Martin, we're to do with $1 million right now. Things are tough. It will be easy for us. Is there anyone we can talk to and get a grant? Get something. Especially with these economic conditions, you sit back at times and you say, it will have come in. But always we've seen is that when we don't raise and we really, crack our heads, we figure out a way to navigate and, still stay profitable and just grow steadily. And again, fundraising really takes you out of the business. So when you speak with other founders, like we're in a group where we talk with a lot of founders in Kenya around, in fintech, in edtech, in agri. So we sit every once in 3 months and we sit and we have conversations. And you can hear from those who've raised that it's not as easy. So it takes you a lot from the company. You might spend a whole year just doing investor interviews and whatever, speaking to people, different time zones. So if your structures are not strong enough in the company, you end up leaving a lot of the work to either the head of operations or my partner. And if you're a young company, a lot of things can go wrong when you're not there, right? Because you're either in London, jumping in New York, you're jumping to whatever it is, you're having calls with investors. So you neglect a bit of the work that you need to do as CEO in the company. So again, that also, I've seen companies that have really struggled. You go for 1 year, you've raised money, and then you come back, you realize your culture went dead. No one was leading it, very well. Or products, started growing in a different way than you envisioned because you're not there involved in the business every day. So it's good, but I feel like it's easier to navigate fundraising when the structures are proper in the business and you're making revenues.
Okay. Yeah. And I'm just going to ask you a couple more questions, if that's okay. My first one is going to be, you've experienced the highs of being an entrepreneur, you've experienced the lows of being an entrepreneur as well. What sort of advice would you give to young entrepreneurs out there wanting to start a business in Kenya or East Africa?
Just start. Just jump. Just jump. Fun fact, when we started our first office for Tera, we didn't have rent. And it's an interesting story. I'll tell you about it. We did not even have money for rent. And my partner, Martin, is a techie, so he games a lot, right? So he went for an Intel challenge and he won a Galaxy tablet. That's way back in 2013. And we didn't have rent, but I sat with the landlord and I told him, hey, I'm going to sell this tablet. I'm going to make 40,000 shillings and I'm going to use that to pay you rent for 2 months. And we sold the tablets to him. That's how we were able to pay our first rent for 2 months. And looking back, I was telling Martin, no, if we didn't start and we didn't think about that, we will not probably be here. So it's scary, but I always say just start. The worst that will happen is that you'd fail. And with failure comes learning. We failed so many times. There's a lot of things. I told you, we tried escrow, like I was telling you, it didn't work out. We've tried, many other things that didn't work out. So I just tell them, just start. You'll figure out there's no perfect business plan. There's no perfect, those models that you do and you say, I'll be profitable in 2 years. Doesn't work like that. Probably in 6 months you realize, okay, this whole business doesn't work out. So it's probably start, but Africa is unique because we don't have the luxuries of just starting. A lot of us, I might have been lucky. There was a place I could fall back to. If it didn't work out, I just go back home and say, okay, if it didn't work out, Dad, can we figure this out? But a lot of African entrepreneurs don't have anything to fall back on. That's why people probably might be a bit risk averse, right? So there's also those dynamics. But I'd say if you're in a place where you think you can risk it and you have somewhere to fall back on, you'll have a home to sleep in, you'll have a house, shelter and food, just try it. Just jump. Yeah.
Great advice.
Yeah.
And then for you, looking forward, if I was to ask you in 10 years' time, what is your hope for Terra and the impact that you're having on Kenya, East Africa, the wider continent?
Yeah. Three things come to mind when I think of what does a picture of success look like for Terra. Number one, it's Pan-African. So if you notice when you walked in, it said Nairobi HQ. That's on purpose because we want to be a Pan-African company. We want to be in multiple markets, offering our services to multiple customers across Africa and beyond. So number one, Pan-African. Number two, profitability. We don't want to be in 10 markets and posting losses every single day. So we want to show people that if you take time and run your business, slowly but surely just growing it, you can be a Pan-African company, but very profitable as well. Number three for us is team. We want to be a brand that people want to come and work for. So like I said, we're building a legacy business. So for us, we want to be that company and that brand that people coming in Kenya, to work, or graduating in Kenyan University, the top talent wants to come and work at Terra because of what the brand means to them, the culture that we've created in the organization. So that's very key for us. So those are the three things to look at for us. Yeah.
And then in terms of an impact perspective, you mentioned that your technology is feeding 250,000 children.
Yeah.
But actually the digital wallet technology is opening so many doors for the continent. From an impact perspective, how do you hope that Terra is helping the continent?
Yeah, to drive financial inclusion, especially in places that are overly overlooked. Our solution is being used in very interesting places. It's not the sexy places where you'd find fintechs in. So we find ourselves dealing with farmers, for example. And, we give a solution that's impacted 650,000 farmers, tea farmers in Kenya. What we're thinking about it is, how can we enable these farmers to get cash advances, when they deliver tea, and how can that cash advance be used for healthcare, for them to buy medicine, to buy food at home. So we really want the platform to impact a lot of the users that use it. And we've seen that very early on at Terra, is that because of the nature of our product, because it's, again, very sector agnostic, as opposed to before, is that our solution can be applied in transport, in retail, in education, in healthcare, in agri. So because of the nature of the product, we're seeing that we can impact a lot more people across the continent, whether it's farmers, whether it's people needing medicine. So, yeah, so impact for us also is a big thing. And we find it coming to us very naturally because we go and solve those problems that no one wants to solve. So everyone in fintech wants to do money, process money in and out. But us guys are thinking of how can we give a wallet a farmer that helps them take their kids to hospital? How can we build a wallet that enables kids to get uji? Uji is porridge in Swahili, to get uji every single day. So yeah, for us, a lot of the use cases that we've been providing are very impactful, and we hope to scale a lot of those programs across Africa. Yeah,
it definitely sounds like the future for Africa is very exciting and a number of levels.
Very, very, very. It's exciting, and you realize Africa is really huge. Kenya alone is not enough. Yeah, so for us, being Pan-African, that's one of the goals. It's been able to deliver this solution to a lot of people who need it and also seeing the impact that comes with. Yeah.
Collins, thank you so much for your time today and for hosting us at your wonderful office. It's been a great conversation.
Thank you. Karibu tena.
Asante.
All right. Bye-bye.